What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about both silver and gold, as well as a new catalyst that is signaling a massive recession is on the way. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel, come and join us in the Precious Metals VIP Club, and of course, go and get your 5 free stocks by downloading Webull and funding your account. Normally it's 2 free stocks. For the next couple of days, it's 5. Capitalize on that while you can. Everything is linked in the description. So today is Monday, March 7th, 2022. The current spot price of silver, as I'm filming the video, is $25.58. It's down 14 cents or down 0.54%. Nice red day for silver, but still hanging on to the $25 an ounce range, which is nice to see. And the spot price of gold is $1,980 even. It's up $7.10 or up 0.36%. Nice green day for gold. And of course, the gold to silver ratio is in the 76 to 77 to 1 range. But of course, that's as I'm filming the video, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. So today, we're going to be talking quite a bit about silver and gold. We're going to be talking about the precious metals, and as you can see on display, I have a nice little selection. Some miscellaneous coins, rounds, and bars. We have some gold over there. We don't have any junk silver on display today, but before we can even get into the money, I think we need to first talk about the currency. More specifically, what looks like is going to be a massive recession. And I know that there are some people out there who are eager to say we're already in a recession. And to that I say, you ain't seen nothing yet. No, but seriously though, I know time has been flying by lately, but we're currently now only 3 days away from the release of the latest inflation report. The CPI data for the month of February comes out on March 10th, which is this Thursday. I don't know about any of you, but I'm personally nervous about this one. I don't really see any way in the world for inflation to be going down anytime soon. I am optimistic about inflation, but definitely not in the short term. So this next report coming out, I don't exactly have high hopes about, especially with what's going on right now between Russia and Ukraine, further disrupting the already disrupted supply chain. It's hard to be optimistic during times like these. Now, if you remember in January, I had said that the next 2 inflation reports could make the Federal Reserve take emergency action and essentially rug pull us in a desperate attempt to get inflation under control. The first report was bad, and the second report, which is coming out on Thursday, is likely to also be bad, but I no longer believe the Fed will take emergency action just yet. The release of the report and the policy meeting are too close together. They're only 6 days apart. I don't think any emergency action will be taken in those 6 days. But either way, this and next week are very crucial. So we need to keep our eyes peeled and pay very close attention. Number 1, to simply stay informed. But 2, some buying opportunities may present themselves to us, as I'm sure we'll be seeing a higher level of volatility in the markets. We know how reactive the markets are to events like this, and I've also explained in recent videos why I believe the Federal Reserve might end up intentionally sending us into a technical recession as a method of combating inflation, which brings us to today's video topic, the coming recession, or what I believe to be the coming recession. And that's because over the weekend I was looking at some charts provided by Bloomberg, and I was doing some reading on the 10-year Treasury yield versus the 2-year Treasury yield. This is called the 10-2, and every single time the 10-2 yield curve inverts, it signals a recession is on the way, usually within an 18-month time frame. Now, I have a picture right here on screen. You can actually look at the chart that I was looking at. Now, like I said earlier, People like to think we're currently in a recession. No, a recession by definition is when we see 2 consecutive quarters of negative GDP growth, 6 bad months, and that's not what we're seeing. We're seeing GDP growth right now, at least for the time being. But by looking at the 10-2, we can see that a recession is being heavily priced in right now. The 10-2 yield curve has been falling dramatically. In January, it fell from 90 to 60. Then in February, it fell from 60 to below 40. And now, so far in March, only 1 week deep, we've fallen just a hair under 40 down to 24. So the 10-2 yield curve has essentially collapsed. Now, it's probably likely that Russia and Ukraine has something to do with the recent fall, but we've been seeing a massive decline all year. And with the curve falling the way that it has, it's almost like a person waving a big red flag screaming, "Recession, recession, recession!" That recession is heavily being priced in right now. And people are looking for a flight to safety during these rocky times where there's also a war going on, and now have banks putting out statements that the price of oil is likely to drastically go up, saying that a barrel of oil can go up to $150 to $180. And we're already seeing oil the highest it's been since 2008. And not to pat myself on the back over here, but who was the one that said a week and a half ago that oil would be the next thing to get spiked? Likely due to retaliatory sanctions coming from Russia. That was this guy. And by the way, speaking of oil, if we see the price per barrel go up to 150 to 180 or somewhere within that range, we can easily add 2 percentage points to the CPI. And remember, the next inflation report, the one that's coming out on Thursday, I'm personally optimistic about. I'm kind of leaning towards inflation probably climbing up to around 8, maybe 8.5%. I think that's probably what the inflation report is going to say. So then if we add 2 percentage points to that from an oil spike or a potential oil spike, we're going to be easily looking at double-digit inflation. That's not good. Meanwhile, we're still overstimulated from the last 2 years of stimulus checks, tax credits, and non-existent interest rates, which means people have more money than they've ever had before. People feel richer than they've ever felt before. Checking account balances are the highest they've been in, I don't want to say in history because that's not something I'm sure about, but checking account balances right now are the highest they've been in at least a very, very long time. A lot of people have a lot of money right now, and people have a lot of money. We live in America, land of consumption. People are spending, spending, spending. And with all of the spending that we're seeing, it's driving up prices even more, which is leading to a form of a wage price spiral because right now workers are demanding pay raises, which is leading to more spending because they're earning more money, which is leading to even higher prices, which is leading to even more people demanding more pay raises, and the cycle is just continuing. It's almost like a house of cards. And I'm going to say it right now. I believe that if this next inflation report is worse than the last, no one will care. I'll care, you'll probably care, but the overwhelming majority, no one will care. Like it doesn't even matter. I also believe that the Federal Reserve meeting next week, where rates start to get hiked up, I believe that will also do nothing. I believe we're going to see a series of rate hikes, and somewhere during the process, it will become effective. But right off the bat, I don't think it's going to do a friggin' thing. I think even with rates finally starting to go up, people will still be spending. Which brings us around full circle to what I've been saying for the last couple of weeks. I believe the Federal Reserve will send us into an intentional technical recession if that's what it takes to get inflation under control. They have the power to do that. And as the great Chael Sonnen always says, I reserve the right to change my opinion if confronted with new information, but at this time, That's exactly what I'm expecting, and that's exactly what I'm preparing myself for. Now, my way of preparing myself, my way of bracing myself for these rocky times to likely become even rockier, is to, funny enough, stack and invest as I've been stacking and investing for the last couple of years. I'm not really changing up my strategy. I'm doing things the way that I've been doing things, as if nothing's going on. I believe that's probably the best way to go. Now, before we really get into the silver and the gold, because I want to talk about something when it comes to inflation, I want to bring something back up that I haven't talked about in a little while. I wanted to talk very, very, very quickly about how the stock market is behaving today, being that it's Monday. I'm filming this video at about maybe 10:15 in the morning, so the market just opened up. The week just began. And we currently have the S&P 500 down 1.13%. We have the Dow Jones down 1.12%. And we have the NASDAQ down 1.32%. We're nosediving right now. We opened up in the red. We're continuing to fall. We're seeing red across the board. Everything is down. Now, once again, before we jump into the silver and the gold, since we're on the topic of the stock market, just a friendly reminder to go and get your 5 free stocks by downloading Webull and funding your account. Usually it's 2. They bumped it up to 5 for the next couple of days. If you refer 1 friend by March 15th, they will give you 10 free stocks for the referral. And if you refer 3 friends before the end of the month, they will give you a spin on the Webull wheel, which guarantees you at least 1 free share of Apple with the chance of winning 2, 3, 5, 7, maybe even 10 free shares of Apple. Don't pass up on an opportunity. Webull link in the description. But now moving away from that, moving away from the 10-2 yield curve and how it's signaling a recession, moving away from the Federal Reserve, moving away from inflation, moving away from the stock market, let's now get into the silver and the gold. Sitting here on display, you can see we have a nice little selection. We have some miscellaneous coins up here at the top, Type 1, Type 2, Silver Eagle, Maple Leaf, Kangaroo. We have some special Maple Leafs over there, 25th and 30th anniversary. We have some fractional gold right down the line right there. Creatures of the North, some silver bars, and some other miscellaneous coins right down here at the bottom. So a nice little selection. But I wanted to bring something back up because maybe 2 or 3 weeks ago, I had mentioned a new stacking strategy. Now, I had mentioned it as a joke because it was when the last inflation report had come out and we had learned that inflation had gone up to 7.5% according to the data that we were looking at. And I had made a joke saying that maybe this is an indicator that I should start stacking silver 7.5% more. Do whatever it is that I need to do to acquire 7.5% more silver than I was acquiring in previous months. Now, I said that as half a joke. I was being half serious, but I was also half joking. But I'm going to be honest, a couple of weeks have gone by and it's starting to make more and more sense. And God only knows what this next inflation report is going to say. 8.5% potentially. We won't know until Thursday morning. But if that ends up being the case, that might be a sign to just stack 8% more and or invest 8% more. That might very well end up becoming my new strategy. Base how much I'm stacking off of what inflation is looking like. And unfortunately, I couldn't find the article that I was reading. So I didn't want to really reference it, but I'll say it really quick. Usually if I'm going to talk about something, I'll put an article on display. And people say, oh, why you just screenshot the headline? I screenshot the headlines so that you can find them on your own. That's my way of citing sources. You know the name of the article, you know what website it's on, you know who wrote it, and you know the date and time it was written. That's why I post those screenshots. Unfortunately, I can't find this one, but it had something to do with increasing what's considered the neutral inflation rate, like for the longest time, we always said 2.5%. In recent weeks, it has been suggested that we should probably bump that up to 3.5% and consider 3.5% to be normal, based on how crazy inflation has gotten right now. I cannot find that article for the life of me, so I don't want to deep dive into that. But regardless, during good times or during better times, when we see inflation at a lower point, not 7.5%, potentially 8%, and God only knows, maybe even the double digits, not during these times, but during the better times when inflation is down, I'd still be stacking. Just like I was 2017, 2018, 2019. Inflation wasn't through the roof at the time. Sure, prices had gone up, but inflation wasn't horrible. Nobody was complaining about inflation. Nobody had gotten to the point where they were saying that they can't afford food or they can't afford rent anymore because the prices are skyrocketing. Nobody was saying that during those years. But I was still stacking the silver and gold. And why was that? It's because I'm a proactive person. It's because I feel it's best to stay ready so you don't got to get ready. I feel it's best to take care of a problem before it becomes a problem. See, I like to be solution oriented. I know for a fact that there are a lot of people out there that, for whatever reason, they're problem oriented. They just by reading the comments, I can tell most people are problem oriented. People just complain about what the problem is. They blame who's at fault. Oh, it's this person's fault. It's that person's fault. This is going wrong because that person's doing this. But they're not doing anything to solve the problem. Now, there's not a whole lot we can do to, go up against the Federal Reserve, who can print hundreds of trillions of dollars in the blink of an eye. Not a whole lot we can do about that. You could be the hardest working person on the planet and you still can't outperform how much they can just print. Snap their fingers, trillions of dollars just appear. I understand that. But there are things that we can do to prepare ourselves. There are things we can do to brace ourselves. In fact, I made a video just a couple of weeks ago. It's one of the best performing videos this entire year so far. It was talking about a massive wealth transfer coming our way. If you haven't seen the video, please go and check it out. I guarantee you, it'll really give you something to think about. Because in the video, it was talking about this quote that I stumbled upon that said, inflation is when wealth transfers from those who are saving to those who are holding assets. And silver and gold, everything that I have on display right here, it's just one example of, one of the asset classes that we can be holding on to. It could also be in reference to owning a business, real estate, stocks. These are all different asset classes. And they typically do the best during inflationary times. In fact, the people who are saving their currency for a rainy day, as we were all taught to do, that's what I was taught at a young age. Hold on to your cash, save your cash, don't spend your cash. All the people that are still doing that in 2022, if it's 2022 and you're still hoarding cash, you're going to get eaten alive. And I think most of the people watching this video right now probably don't hoard cash. I definitely don't hoard cash. I hope we all have a cash emergency fund, but I wouldn't say that's hoarding cash. See, what I try to do, I have a little bit of cash set aside just in case something goes wrong, just in case things go south. I have a little bit of cash that I can just grab and go if I need to. It's a little bit easier to work with cash than it is to part ways with a little bit of silver or to sell stocks and then wait for a deposit to transfer from the brokerage account to the bank account, then withdrawing the cash or running over to the coin shop and selling a silver bar or whatever the case may be. It's a little bit easier to just have a little bit of cash in the safe alongside the precious metals. But I don't keep a whole lot of it. In fact, I should probably keep a little bit more than I even do. I'm just hung up on the fact that I can't stand cash, and I'd rather have my cash injected into something that stands a better chance of storing value than a little piece of paper, because a little piece of paper, a fiat IOU note, is not going to do anything for me in the long run. It might do a whole lot for me in the short run. It might help me out. Short-term problems, that's where short-term solutions come into play, aka the cash, aka an emergency fund. But personally, if it were my choice, I wouldn't carry any cash at all. I would have zero cash, $0. I would have no cash at all in any way, shape, or form if I could have it my way. I just happen to understand the importance of having an emergency fund. And I think everybody should have one. But for the most part, I'd rather take all of my leftover currency and do 3 different things with it. And this is what I talked about at the very beginning of the pandemic. 3 different things to do with cash that I like to do with cash. Number 1, convert it into silver and gold. Convert it into something that stands a better chance of storing value. Invest it into something that can produce maybe a little bit of cash flow. See, I think cash by itself is trash. I think cash flow is king. I think that's something that not a lot of people understand. And then 3, spend it on something that will save me currency in the long run. For example, the water purification system that I got. I got it about 3 years ago, and guess what? I have not purchased a single bottle of water. Haven't bought a case of water, haven't bought a jug of water, have not purchased water in about 3 years. I was called crazy by family members. They're like, you spent $200 on a water purification unit? They're like, it's just easier to get a jug of water for $1 at the grocery store. Well, guess what? I drink about a gallon of water a day, which means I'm drinking away over $1 a day, and the water purification unit cost me a little over $200, $225, let's just say. So by the time 225 days had gone by, I had already broken even. And on day 226, at that point, in a weird way, you can say that I, not really, but kind of started to profit off of it. Because at that point, I had broken even, and every day that had gone by after that was another day of just not buying water. And that's just one example. Like I said, 3 different things to do with the currency. Convert it into something that stands a better chance of storing value, invest it into something that can produce a little bit of cash flow, and spend it on something that will save you currency in the long run. I don't mind spending my currency on something that I know will save me currency. I don't mind putting $200 into something if it means that I never have to buy a bottle of water again. Those are the only things that I like to do with my currency. Of course, after the monthly bills and expenses and all that nonsense is taken care of. And by the way, speaking of like saving currency, I work from home most days. I also film my videos and edit my videos from home most days. I don't do a whole lot of driving anymore. And I was just talking to somebody about this yesterday. I'm making a deal with myself. I'll give myself 3 passes for the whole spring and summer. I'll allow myself to drive 3 times if I need to. I really don't need to drive anymore. Now, I understand that's not something that a lot of people can align with, but that's just another thing that I'm just choosing not to do. If I work from home, there's no real need for me to drive to a whole lot of places. I get my groceries delivered to me. I've built myself a gym here in my house. I've built myself a library here in my house. Everything that I need is right here. Everything that I need for work, everything that I need for YouTube, everything that I need for the VIP club, everything I need for exercising, everything I need for reading, everything I need for everything is right here. I pretty much don't need to leave. So point being is that when all my monthly expenses are taken care of, however much extra currency I have, I don't care if it's $5, I don't care if it's $500, I don't care if it's $5,000. By the way, I would love for it to be $5,000. I usually don't have $5,000 left over at the end of the month, but that would be nice. But either way, regardless of how much it is at the end of the month, I don't go and burn through it frivolously on things that don't matter. I don't go out to eat every day. I don't even go out to eat every week. I don't think I even go out to eat once a month. I don't go and spend it on all these recreational activities or these miscellaneous things. That's just not my style. That's not what I like to do, and that's not what I enjoy. I get a greater deal of satisfaction out of taking my currency, like I said, even if it's just a couple of dollars, and putting it into a little bit of silver, maybe a little bit of gold, or investing a little bit of it, produce a little tiny bit of cash flow, or spend it on something that will save me money in the long term. Even if I only convert it into a handful of 90% silver, even if I only invest it into a pretty simple index fund, or even if I just convert it into something that really only costs a couple of dollars, but I know it'll save me money in the long term. It doesn't have to be massive amounts of cash being converted into precious metals or invested or spent on things. It doesn't need to be that way. You can do it with just a couple of dollars. And I believe that the compound effect is working. It's been a little over 4 years of stacking. It's been about 1, maybe 2 years of investing. That snowball effect, the compound effect, the ripple effect, is starting to finally get to the point where I think I can officially say it's in full effect. So I'm pretty excited about that. But either way, those are just some of my thoughts. I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to the 10-2 yield curve, is that something that you look at? Is that something that you pay attention to? When it comes to the Federal Reserve, do you think that they're going to intentionally send us into a technical recession as a method of combating inflation, as a method of getting things under control? Do you think it's something that they're going to try to do? And of course, when it comes to the silver and the gold, what are your thoughts on my strategy? Basically matching inflation. Whatever inflation says, whatever the CPI report says, that is 7.5%. Probably a hint, probably my cue to ramp up how much silver I'm stacking by about 7.5%. And if it goes to 8%, or 8.5%, or even if it goes down to 6%, whatever it is, match inflation by whatever the percentage is at the time. Head on down to the comments and let me know. If you guys liked today's video, please hit that like button, subscribe if you're new, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Got t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs. We have the limited edition, luck has nothing to do with it, t-shirt and hoodie, only available until St. Patrick's Day. Portion of the proceeds are helping us raise some money for St. Baldrick's Foundation. Get one while you can. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month, live streams multiple times a week, deal alerts on silver and gold every single day. You can watch all of my videos early and commercial free, and every Saturday morning I post a brand new adventure vlog. There are a ton of other perks as well. I guarantee you the value exceeds the cost. VIP Club link in the description. And of course, last but certainly not least, go and get your 5 free stocks by downloading Webull and funding your account. They're going to give you 5 free random stocks just for doing so. And if you refer one friend by March 15th, they're going to give you 10 free stocks for the referral. Don't pass up on this. And if you refer 3 friends before the end of the month, they will give you a spin on the spin wheel, which guarantees you at least 1 share of Apple, with the chance of winning 2, 3, 5, 7, maybe even 10 free shares of Apple. This is a massive promo going on right now. Don't pass up on an opportunity. Webull link in the description. And I want you guys to head on down to the comments and let me know once again, what are your thoughts on everything shared in today's video? When it comes to the coming recession, or all of the different signs, all of the different signals that we have right now that are pointing to a massive recession coming our way, what are your thoughts on that? Do you pay attention to the 10-2 yield curve? Is that something that you look at? Is that something that you've ever even considered before? What are your thoughts on what the Federal Reserve is going to do? Do you think that they're actually going to send us intentionally into a technical on-paper recession as simply a method of trying their best to combat inflation? And then, of course, when it comes to the silver and the gold, what are your thoughts on my stacking concept that originally started as somewhat of a joke? If inflation was 7.5%, oh, okay, guess that means I should increase how much silver I'm stacking by 7.5%. Originally, it was said kind of as a joke. And the more I thought about it, the more I realized I was like, wow, that's actually probably not a bad idea. What are your thoughts on that right there? Is that something that you're doing? Is that something that you're going by? Head on down in the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.